Hello friends, good afternoon everyone. Please type in a S if you can hear me. Yes, wonderful. So hope you all are safe and sound during this situation. Let me just give you a quick intro and we'll just start in 2-3 minutes. So Date sir is joining us in 2 minutes and we'll start with the presentation for the day.
Hello.
Sir, good afternoon sir. Can you hear us?
Yes, now I can see the PPT. I can hear you.
Yes, sir. We are live. Let me just give you a quick intro, sir, and I'll hand over the PPT to you.
Okay.
Okay, friends. Sir is here. So let me just give you a quick intro about Taxman. Taxman is a leading publisher on tax and corporate laws in the country. We also maintain the largest and most accurate online database on income tax, international taxation, GST, etc. Our products include books, journals, offline research, online research platforms, tools for TDS compliances. We also develop the national website of Department of Income Tax and also maintain with our technology and editorial support. Let me just quickly introduce the legendary Mr. V.S. Date here. Mr. V.S. Date, BTech, FCS, FCMA. He is already a renowned name in the entire taxation industry with 27 years experience in industry in secretarial and finance departments. He has been a general manager, finance and secretary in leading listed companies since 1994. Mr. Date is concentrating on writing books in indirect taxes and corporate laws. All his books are published by Taxman. His books are prescribed for exams like CA, ICWA, and Company Secretary. I know all of you are already aware of him. It's my responsibility to give a quick intro. So here we are. We also have Mr. Sunil with us, who is a part of our editorial team and R&D team at Taxman. Right. So quick. I'll just take quick another minute before I hand it over to Mr. Date, sir. Quick tips: your mic is always on mute. You'll not be able to talk during the webinar. However, you may post your questions in the chat box. As you can already see, all of you are saying good morning, good afternoons. So yes, you can use that chat box. Your questions will be answered by the speaker, Date sir, and also we have Sunil and also our entire R&D team who is going to support you with all your questions here. After the session, just before the end of this session, you'll get a copy of this whole presentation for your future references. We also created a wonderful ebook with the help of Date sir, and that will be very useful for you to get an understanding on the topic. So these both will be given as handouts to you before the end of webinar. So over to you, Sunil. Please quickly introduce about this the topic and take it forward.
Thank you, Saminway. Hi, everyone. I welcome to all of you in this webinar. My name is Sunil Kumar, and I am from the Indirect Tax R&D team of Taxman. I hope you all are healthy and safe. So, as you all know, that GST law has completed its 3 years, and we are in 4th year after its implementation. If we see back and analyze the journey so far, we would find that the law is becoming more complex day by day instead of getting settled. The major contribution to these confusions would no doubt go to the authorities of advance ruling, and real estate sectors issue pertaining to real estate sector are not untouched with these authorities. Firstly, the GST provisions relating to real estate are complex to understand, and secondly, orders of advance rulings have made it more complex if we see the from analysis perspective. Recent issues like GST applicability on sale of developed plots, analysis of the meaning of the term residential dwellings, where one can observe that the issues which were more or less settled in the erstwhile regime, in my humble view, the authorities have made it unsettled in the GST regime. So today we have Mr. Date with us, who would be taking us through on different issues faced by real estate sector and enlighten us with his views. Over to you, sir, please.
Okay, thank you. Good afternoon. I am Date here. Today we'll be discussing some issues relating to real estate sector. So again, good afternoon and wish you a happy corona-free life. Now, I'm sure most of you are familiar with the real estate sector. As you are aware, the real estate sector as on today is in great difficulty. Because people are feeling that there are good investment opportunities in real estate, so people had started investing. Now, due to this investing, what has happened is there is oversupply, and now there is sluggishness is demand, due to which investors are disappearing. Now, really, only those who really want the residential or commercial premises, only they are coming. Investors are mostly not coming. Now, again, there are difficulties due to RERA, anti-profiteering, consumer court, competition commission. So, real estate sector is cornered by all these issues. Again, if you know, earlier, all the contracts which real estate the developers and promoters were entering into with the customers were absolutely one-sided contracts, all terms favoring the builder or promoter. Now, all such one-sided contracts, now courts are not willing to accept such one-sided contracts. And they say these are against the Contract Act and these one-sided contracts are not acceptable. So whatever you write in the contract, actually courts do not accept them. So this again has created problem. As you know, many big names in real estate sector are facing insolvency proceedings in banks. A good chunk of NPA are due to real estate sector. So they have come into trouble and they have brought banks also into trouble. Now again, home buyers can file application for initiating corporate insolvency resolution process. Now, luckily, for 6 months, they are given respite from this insolvency process. But anyway, these issues are going to come. Now, whatever recovery was there, now it has been smashed by Corona. All the temporary workers or casual workers, they have fled, and then again bringing them back from UP, MP, Bihar, etc. is big challenge. So, it will at least to bring the things to normal. Now, if we see what is the scope of real estate sector, the scope of real estate sector is quite wide. That is renting and leasing of immovable property, TDR, FSI, long-term lease, sale of land and developed plots, real estate projects under RERA, works contracts, government-related construction sector. So the scope is quite big. Now, though I have summarized all these issues, I will dwell upon only those issues which are really of concern or where their controversies are there. Where not as controversies there, I will just glance through, and anyway you are going to get this PPT, so you can go through this PPT and see the points. So whatever the routine matters are there, I will just glance through, and wherever there is some dispute, I will try to be a little more elaborate. If you give let us see a constitutional background of GST, and particularly in relation to real estate sector. Now, taxes on land and buildings is a state subject. It is under entry 49 of list 2 of 7th schedule, article 246. Now, generally, if an issue is under state subject, central government or center cannot tax that particular transaction. It is reserved only for state government. But Article 246A of the Constitution confers concurrent powers to center and state to make laws with respect to tax on goods and services. Now, these are overriding powers. So, Article 246A overrides Article 246. Now, if you see the definition under the Constitution as well as under the GST law, the Constitution says services means anything other than goods. It's a very, very broad definition. So that means immovable property transactions can come under the definition of services because it is not goods. So technically and principally, services can cover immovable property and GST can be levied on immovable property. So constitutionally, there is no bar in imposing GST on transactions in immovable property. Now, as you are aware, GST Council is a supervising authority over all the GST transactions. But you may be surprised to know that GST Council has powers only to recommend, because all the state governments and even central government are sovereign powers. Now, GST Council cannot override their sovereign powers. There is no specific provision that recommendation or non-recommendation of GST councils are binding on center or state. Even if center does something, there is no constitutional binding that state must do that thing. So each state and even center are sovereign authorities and can refuse to accept recommendations of GST council and can impose tax without recommendation of GST council. Luckily, they are not done so. They are not expected to do so. But constitutionally, there is no restriction on powers of central government and state government to do so. Now, let us start with sale of before completion. As per para 5B of Schedule 2 of CGST Act, construction of complex buildings, civil structure, except where entire consideration for sale has been received after the issuance of certificate, is to be treated as supply of services. That means any building under construction, residential or commercial, if you make a supply sale before it is completed, that is completion certificate is obtained, then GST is leviable on that transaction. As per para 6A of Schedule 2 of CGST Act, works contract shall be treated as a supply of service. So, on works contract and sale of building before completion, GST can be imposed, and in fact GST is being imposed. Now, interestingly, as per Article 69A of Constitution of India, transfer of property in goods involved in execution of works contract is deemed to be sale of goods. So Constitution treats it as a sale of goods, but GST law treats it as a provision of supply of service. So there is some contradiction, but legally GST law can provide something which is against the definition in the Constitution. So if somebody challenges, I don't think that challenge will be held wide. But it remains that definition under GST law is different from definition under Constitution. Now, what are transactions out of GST? As we saw, that GST can be imposed on immovable property. There is no constitutional bar. But para 5 of Schedule 3, para 5 of Schedule 3 excludes some transactions which are out of GST net. Now, what are those transactions? Sale of land, sale of building or apartment after its completion, that is after obtaining completion certificate, then GST is not leviable. Now, as Sunil was discussing, there is issue of sale of developed plots. Now, issue, as A.R. Gujarat has said, that GST is leviable on sale of developed plots on the entire value of consideration. Now, as we saw, sale of land is actually out of definition of GST. Now, issue is whether sale of developed plot is a sale of land or it is not or it is a supply of service. Now, on this issue, in a day or two, an article will also be coming on, my article will also be coming on Taxman, and there I have discussed this issue in thread in great detail, but I will give you the main points. The main, sometimes the developer also provides common facilities like gym, clubhouse, temple, security offices, etc. So now the issue is whether GST can be levied on developed plot, and this issue is going to hot up considerably. Now, really, see, even if you make development, you construct roads, you develop infrastructure, you drainage, lighting, etc., compound, etc. But the fact remains that even after the doing all that, the plot still remains a land. It is still a land. It doesn't get into converted into something else. So what the developer or promoter is selling is a piece of land. He is not giving something else. The document is executed as a sale of land. It is registered in the documents It is with this under Stamp Act, it is treated as a sale of land. As far as registration is concerned, it is treated as a sale of land right from Indian Stamp Act and Registration Act. This transaction has been treated as a sale of immovable property and sale of land. So this cannot be converted into something different, and it is still continues to be a sale of land. And out of so what you are doing by developing infrastructure, roads, etc., you are doing value addition. Still, its characteristic does not change from land to something else. So it continues to be a sale of land even despite the value addition. As you know, under GST there is definition of composite supply and a mixed supply. So in case of composite supply consisting of various transactions, you have to go what is the principal supply, and there is no doubt that principal supply is sale of land, and according to me that AR decision is not correct. And in the this I am giving you in brief, but in the article I had given the case law also, and I believe that of course the matter will go to courts and all that. But according to me, if you take proper care, what are the cares required? First thing, you should not charge separately for development charges. You just the agreement of sale of land should consider only one price, that is the total price. No difference in no distinguish. I mean, no separate price should be shown for development. Secondly, the infrastructure, roads, etc., can be considered as value addition to immovable property. But gym, clubhouse, temple, security officer, if you provide somewhere, that it is very difficult to say that this is you are doing value addition to the land. So my suggestion is that in sale of land, this aspect should not be considered, included at all. This should be charged at optional, and if somebody is interested, he should go there and pay and something. So this should not be part of the sale of land. This should be excluded. Otherwise, infrastructure, roads, etc., it is part of the value of value addition to land. It continues to be land, and in that case, in my view, GST should not apply. But be prepared for lengthy litigation on this issue. Now, as you are aware that in case of real estate, the provisions have been drastically changed from 1st April 2019. Input tax credit has been abolished. So, and there is no option to pay GST at now. You know, their rates are 1% and 5%. But nobody can say that I will pay 12% or 18%, I will claim GST. That option is just not available at all after 1st April 2009. Now, barring that option completely, whether it is legally valid, that also is a issue, because this is ultimately a composition scheme, and composition scheme can never be made compulsory. But anyway, they have made it compulsory. That can be really challenged. Now, real estate project that is defined under RERA also more or less practically same definition under GST Act. It can cover both residential and commercial apartments like shop, office, godowns, etc. Now, commercial apartment has been defined means anything other than residential apartment is commercial apartment. So it is a residential apartment means for the purpose of residence. It should be for the purpose of residence. Just you have got facilities for residence, that is not the criteria. It should be for the residential purposes, and all facilities should be for residential purposes. Then only it will be a residential purposes. For example, you use it as a guest house, then that cannot be treated as for residential purposes. Guest house cannot be treated as a residential apartment. It is not used as a residence. Now, I added one more definition in GST law, and that is not there in RERA, and that is residential real estate project. RREP means REP with commercial apartments not more than 15% of total carpet area, and balance 85% should be residential apartment. Now, one issue is that 15% carpet area, whether they are common buildings like you may buy security premises, pump house, etc. Now, whether this area will be treated as a commercial area or a residential area. According to me, these common buildings cannot be treated as commercial apartment because they are not for sale. So they cannot be considered for the purpose of 15% of the total carpet area. Now, normally under commercial terms, we always use the term builder or developer, but the GST law and RERA use the term promoter, and that we should change the wording from builder or developer to promoter. Now, as you know, project with more than 8 apartments or more than 500 square meter requires registration under RERA. Now, the CGST Act nowhere says that registration under RERA is mandatory to apply the provisions of construction of complex. So technically, even if you are not registered, suppose you have got less than 8 apartments, you may not be registered under RERA. But even then, all the provisions apply. The general scheme of GST is envisaged with RERA in mind, but law never says that registration under RERA is mandatory to get coverage under this provision. So technically, GST provisions apply only to any project with more than 1 building or apartment. Even if you have got 2 apartments or 2 buildings, then it is this GST provisions as far as apartments apply. Now, provisions do not apply to works contract or construction of single residential unit, which is not part of a complex. So, excluding this, the provisions under GST apply to all transactions of commercial complex or residential complex. Now, if you see the scheme of law, the scheme envisages separate accounts for each project. So, if project is big, it is advisable to have separate GST registration for each project, and this will avoid the problems of completion certificate, accounting, etc. Even if you are even if it is a mega project, it is advisable to have split registration so that each apartment, each building you can treat separately, and once completed is building, you get away with that and go to somebody else. Otherwise, it is a mega project, you will have mega troubles if you combine all in one GST registration. That of course you have to decide what is more convenient to you, but that is my suggestion. Now, redevelopment project is of course subject to GST. Now, as you are aware, in GST is payable on apartments given free to original apartment owners. As you know, the Housing Society as Residential Welfare Association, they surrender the area or to the developer, promoter constructs the building, and say whatever the earlier tenants or earlier owners were there, he gives the apartments free to them based on the earlier built up area or carpet area, and rest he sells. Now, even if he gives these apartments free to the earlier owners of the houses or earlier tenants of the houses, actually they are not free. There is the consideration is that they are surrendering, given right to the promoter to develop the land and sell the balance apartment. So it is not free. So GST is payable on apartments given free to original apartment owner. That law is well settled. I don't think there can be any dispute or argument on this issue. Of course, valuation may be doubtful, but otherwise GST is surely liable. GST is payable on slum rehabilitation programs also, as consideration is received from government in form of TDR or FSI. So on slum rehabilitation project also, GST will be payable because the builder, promoter is getting concerned not from the tenant or from the owner, but from government. So it is also taxable. Now this is the defined promoter. Although earlier the term used, generally we use the term builder developer, but the law uses the term promoter. Promoter is the person who constructs or causes construct the building. Development authority or any other public authority is also a promoter. Apex state level cooperative housing society is also a promoter. Person who constructs apartments or plots and persons who sell such plots or apartments, both will be promoters. So mere development plot is also a promoter. He may not actually construct it, so he is treated as promoter. Now the AR said, see, RERA says that they are promoters. So it is a construction complex. Now, of course, that is not correct, because I have given that principle is the definition in other law. That is, under RERA, the promoter may be treated as a promoter of plots, but actually the definition is entirely for different purposes. Even under AAR has taken benefit of support of definition under Consumer Protection Act or case law under Consumer Protection Act. That is also incorrect, because it is law is well settled. The definition under other law, which is not connected with parent law or law under consideration, cannot be used. So unconnected definition cannot be used to interpret a provision in some other law which has no connection with that law. So if landowner sells property, he will still be a promoter. But still, according to me, GST is not well. Now, what is liability of? Because most of the time the promoter himself doesn't construct, he gives subcontract. So contractor supplying service to promoter or other contractor is liable to pay GST. Now, GST rate, the contractor will be liable to pay at 18% in case of commercial and residential apartment. Only in case of affordable apartment, there is some concession that the contractor is liable to pay at 12%. Now, if contractor and subcontractor is unregistered, there is no saving to the promoter, because in that case, the promoter is liable to pay GST under reverse charge, because the provision is that 80% of inputs and input services are required to be from registered person. So this is always a cost to the company. So because he is not getting any input tax credit. So obtaining these services from unregistered contractors doesn't help the promoter at all. Now, define what is ongoing projects as on 31st/3/2019, and for in case of ongoing project, that is all the conditions. In case of ongoing projects, they have made a provision that you can continue. They have given an option that you can either continue under the previous regime, or you can switch to new regime. But now you must have now it is too late. You should have opted for that option long ago. If you had not option long ago, then if you switch to new option, then you have to reverse the excess input tax credit, and calculations have been, principles have been given. They are very clumsy calculations, but that calculations are based on carpet area. If you shift to new scheme, either you have to reverse excess credit or pay less credit. Now, concessional rate on ongoing projects if promoters continue under old scheme. So under old scheme, whatever concessions were there, he gets under new schemes also in different form. Now, as we saw earlier, that if you make a sale after completion certificate, there is no GST. Now, partial completion certificates are accepted. That is, suppose the promoter has 4 or 5 buildings, he can complete one building, obtain its or even half building, obtain the completion certificate, and then make a sale of those plots where completion certificate has been obtained. Now, there is one word, occupation before completion certificate. The sale after first occupation or completion certificate, whichever is earlier. Now, the issue is whether mere occupation is enough. That is, you are not applying, because in many places, people start occupying, using even before. Of course, it is illegal, but people do it. They start using it before obtaining the official completion certificate from the concerned authorities. And there are many times delays also in obtaining completion certificate because there is some issue. The promoter has not done complete, etc. But still people start occupying. Now, whether that occupation is sufficient before according to me, that occupation is illegal occupation. And such if you start occupying, and even if you prove that you start occupying, that occupation is illegal occupation, and still GST will be payable before obtaining official completion certificate. Of course, disputes are possible because, as you are aware, even before obtaining completion certificate, state authorities register document in that many times, even before the building is complete, the authorities register the document. No, actually it is illegal because at that time the building is not complete. It is legally incorrect. But then we can argue that state government has accepted it as a transaction in immovable property, so it should be out of GST. Of course, not a very strong argument, but you can do it. Now, again, there is one issue. Ki purchaser is selling or surrendering before, as we saw earlier, people were making, buying the flats under construction for investment purposes. They had absolutely no intention of using it for residential purposes. It was an investment. So they purchase at the early stages, as the prices go up, they sell. Now, many times they sell before completion certificate. Now, in that case, whether that seller is liable to pay GST, according to me, that he is not supplier of construction service, as he is not in the business of sale of apartment. So here also disputes are possible. Many times, what is done, that the purchaser surrenders the apartment to the promoter, and then promoter refunds the amount to him, whatever, after deducting the amount, and then the promoter makes another sale. That is a pakka way of doing things. Purchaser selling directly to another party is not a really proper way of doing things. Surrendering to promoter is a proper way of doing things. Now, if you are, say, deposited 20 lakhs, the promoter will never refund you 20 lakhs. Actually, when you pay him advance, on that advance also the promoter is required to pay GST. Now, how many pay GST, I am not sure, but they are required to pay GST on advances also. Now, if customer cancels booking, the promoter deducts certain amount. On that amount, the GST is payable at 18%. Because it is termed as tolerating an act or situation. It has been defined as a deemed service. And suppose out of 20 lakhs, the promoter deducts 3 lakhs and pay him 17 lakhs. On that 3 lakhs, the promoter will be liable to pay GST. Again, on 17 lakhs also, if he had paid GST earlier, if he refunds that 17 lakhs with GST, then he can adjust that, but otherwise he cannot adjust that. Now here, it is a practical problem that mostly that customer is not registered under GST. So now under GSTR 1 or GSTR, no, you cannot upload that document because there is no GSTR number. Now in that case, how that GST paid earlier will be adjusted, that procedure is not clear. But there are also difficulties will be there. But law is well settled that procedures do not determine the law. Even if it is the procedure has not been given in GSTR 1 or GSTR 3B, still such adjustment is possible if the promoter refunds the amount with GST. Practical difficulties will be there. Now, residential apartments broadly they have categorized into two: affordable residential apartments and residential apartments. Now, affordable residential apartments carpet area should be less than 60 square meters and 90 square meters in other cities, and gross amount charged should not exceed 45 lakhs. In that case, the GST rate is 1% if you do not, if the value involves transfer of land. The GST rate is 1.5% if the value does not involve transfer of undivided share of land. Now, even here also, if you make a sale after completion certificate, there is no GST. Ongoing projects as on 1st April 2019 are also eligible if the promoter has transferred to the new scheme. Now, other than affordable residential apartments, there are residential apartments. Here, the GST rate is 5% if the value involves transfer of land or undivided share of land. If value does not involve transfer of land, then the GST rate is 7.5%. Now, again, here also, if it is sold after completion certificate, there is no GST. Now, commercial apartments also, they have made bifurcation. Commercial apartment in residential real estate projects and commercial apartments in other projects. Here, as we saw earlier, that if the commercial apartments in residential real estate projects are less than 15% of the carpet area, then this concessional rate of 5% applies. If it includes value of the land. Now, again, if such commercial apartments sale are after completion certificate, no GST. Now, this is applicable only when the commercial apartments are actually constructed in RREP, that is Residential Real Estate Project. If they are constructed in pure commercial project, this rate does not apply. In case of commercial apartments in real estate project other than RREP, the GST rate is 12% if the value includes undivided share of land. So, if it is if land value is not included, then it is 80%. Now, again, people are tempted to make a transaction with the value of land separately and value of construction separately. Now, actually, this is there is AR decision also that such splitting is not permissible, and even if you split in the contract, actually GST will apply to the total amount, including the value of land, even if you have shown it separately. Now, what is value for GST? If total amount charged includes value of land, tax is payable on total amount charged less value of land. Now, value of land will be taken as 1/3 of total amount charged. This is a deeming provision. Now, as you know, in case of large cities, and in most of the places, at least in large cities, value of land is much more than 33.33%. It can be even 60-70% or even higher. If you go to a very prime location, it can be even 80% land value. So now, but you are allowed deduction of only 33.33%. Again, this is a deeming provision, and if somebody challenges this, I think there are good chances, because by deeming provision, you cannot increase the value of transaction or value of service for the purpose of GST. As you know, any deeming provision, any provision in rule, any provision in notification cannot override Section 15. Now, value, what is value? That has provided in Section 15 of CGST Act. Now, any deeming provision cannot exceed Section 55. Any notification cannot exceed the Act. So, by this deeming provision, actually, government is levying GST on higher value, because really the value of land is much more than 33%. Now, whether it is legally permissible, that is highly doubtful. According to me, it can be challenged. Now, whether because the promoter doesn't want to take risk, because suppose he take that risk and challenges, and if he loses after 3, 4, 5 years, then he will be bankrupt. So most probably he will not take that risk. But legally, yes, that provision is incorrect, because then you are paying GST on value which is higher than value under Section 15. Now, in GST on residential project, this is one issue, that PLC, EDC parking spaces, because the promoter charges separately from prime location charges, extra development charges, parking spaces, etc. Now, on that, whether 18% applies or that concessional rate of 5% or 1% applies. According to me, these are naturally bundled services, and they are formed of total amount charge, and GST rate should be, of course, 1% or 5%. 1% for affordable and 5% for normal residential projects. But again, disputes are possible, though luckily there is one AR decision that GST is payable at 1% or 5% only. Now, but club membership deposit or fee is not necessarily bundle service. It has nothing to do with your residential apartment, and that actually should be taxable at the hands of club. The club, because normally what the promoter does, he collects is a deposit and he hands over to the club when it is formed. In that case, according to me, the club will be liable to pay the amount when it receives the amount from the builder. It again depends what what promoter is doing or builder is doing. Now, in most of the cases, you see, residential welfare association or housing society, it takes time to form 1, 2, 3 years, because many promoters, many apartment people must start living and then they form a society. It takes time, maybe 1 or 2 or 3 years. During that period, the promoters provide the maintenance service to housing society or residential welfare association. In that case, he is liable to pay GST at 18% because that exemption of rupees 7,500 per month is not available to the promoter. That is available only to housing society or residential welfare association. Now, as we saw earlier, free apartments are given to the earlier owner or slum dweller or earlier tenant. In that case, on the free apartments also, the GST is payable. Now, according to Rule 27A, the GST is payable on open market value at the time of supply. Now, here also, the department says that you deduct the land value at 33% value of similar apartments you are supplying to others. That is the law, value of supply of similar apartments of like kind or quality. If open market value is not open market is actually available because you can find out the value of similar apartments and then apply the same value. Now, if there is one provision under Rule 3 that value of similar apartments is not available, then you can go for 110% of cost of provision of service. Here also disputes are possible because actually land value is more than 33% and you are actually paying GST on much higher value than that can be calculated under Section 15. Now, promoter often collect deposits for forming a society or club, and then these are handed over to the club or society or welfare association when constituted. Now, this is only a deposit. He is a pure agent. So, on that deposit, of course, he is a crook. He will swallow the deposit, but let us assume that the promoter is a gentleman and he will hand over that deposit to the club or promoter. In that case, that promoter is not liable to pay GST on that amount. But club or association or the society will be liable to pay on that amount when it is handed over to, because then they will be providing service to the residents or out of that. Now here, actually, there is general assumption that if it is less than 7,500, then no GST is payable. Actually, this is not applicable in my view to the initial deposits or even transfer fees which are received from the new buyer. According to me, a transfer fee or even the initial amount which is taken from the tenants or handed over by the promoter to them, GST is payable. That 7,500 is only for routine maintenance. So, now, reverse charge, as far as promoters are concerned or real estate projects are concerned, reverse charge are of two types. Reverse charge is payable on GTA, advocate, arbiter, tribunal, sponsorship, service. These are the major, of course, there are a list of 15, 16, but these are the major aspects where reverse charge applies. Now, there was dispute regarding whether reverse charge is applicable in case of salary paid to whole-time executive director. Luckily, department has issued a circular that GST is not payable. Despite that, you don't know disputes because department circular is not binding on the adjudicating authority. It is not binding on tribunal also. So, despite the tribunal department circular, they can take a different view. But luckily, they won't take it. Hopefully, they will not take it. Again, reverse charge in case of services from government like license fee, ROC fees, inspection fees, testing fees, they are payable if they are above rupees 5,000. Reverse charge is applicable on TDR or FSI or upfront amount for long-term lease after 1/4/2019. So, the promoter is liable to pay GST under reverse charge on all this. Addition, reverse, that is section 9.3 is separate. In addition, reverse charge is applicable if procured from unregistered persons. Now, all capital goods and all cement must be purchased from registered persons. Otherwise, GST rate applies. Now, it is 28% on cement. In case of capital goods, it is normally 18%, but you have to see the classification and then pay accordingly. Now, in case of balance inputs, 80% of inputs and input services, including cement, should be procured from registered person. Cement, there is no restriction of 80%, it is 100%. And but including 80% cement, if your inputs procurement are less than 80%, then on balance you have to pay GST under reverse charge at 18%. It is cost because input tax credit is not available. Now, while calculating just 80%, service of grant of development rights, FSR, they are not to be considered for calculating this 80%. But inward supplies of exempted goods are to be included for 80%. Now, again, some dispute, their salary, now salary may not be included, but what about interest received? Interest received is exempted, that may have to be excluded. Now, generally, the promoter enters into an agreement with the development agreement with landowner. The landowner does not transfer the ownership of land to the promoter. Main reason is stamp duty. Now, often there is an agreement that about say 30%, 40% of the area, carpet area will be handed over to the landowner and balance the promoter will sell. In some cases, landowner has revenue sharing arrangement. That is, in that case, the promoter sells entire flats and then he shares revenue with the landowner. In some cases, landowner promoter is allotted some apartment. It depends, and then he himself sells on his own account, either before completion or after completion. No, sometimes so there are different types of arrangements with the landowner. Sometimes joint development agreement is executed and a separate joint venture company or AOP is constituted. So treatment of GST in each stage separately. Now, if suppose landowner himself sells the apartment before completion, in that case, the landowner will be liable to pay GST. So he is called landowner promoter, and then he is liable to pay GST. He can take input tax credit of GST charged to him by promoter. You see, because promoter has to charge the landowner and then landowner has to charge to the customer. Now here both landowner, promoter and developer, promoter should opt for identical proportion. That is, they should either 1% or 5% or 8% or 12%. The landowner and promoter cannot apply different rates. However, principally there is not loss, but practically it is a big problem. Now, what is the problem? See, if the landowner promoter sells before completion certificate, then he has to pay GST at that stage because his liability, he immediately sells, so his liability starts. But liability of developer promoter is when the completed apartment is handed over to landowner promoter. So that happens at a very later stage. Much before that, the landowner has already sold the flat. So when he sells the apartment, he is liable to pay GST. But when he will get the input tax credit, when the developer promoter hands over the completed apartment to the landowner. So by the time he has already sold the flat. Now, what he will do with that input tax credit? Because that input tax credit will be unusable. So there is no provision of refund for such unused input tax credit. So now somehow you have to make some arrangement that the developer promoter issues a tax invoice early under completion and then pays GST. If he doesn't do that, then the landowner is in great trouble because then that time he has no input tax credit, and when the developer charges in GST, it is useless to him because he has already sold the apartment. So this is a very big practical difficulty. I don't think the department has thought over this practical difficulty at all. TDR, transfer of development right. Transfer of development rights by government. You see, TDR can be by landowner or society, or it can be by development. Now, these are called TDR. See, there is difference between transfer of development rights and transferable development rights. So, transferable development rights are different from transfer of development rights. Though generally both are termed as TDR, but there is surely difference between transfer of development rights and transferable development rights. Transferable development rights means actually government allows you transfer of FSI. So the government is actually supplying you imaginary land, and that imaginary land you can use it as an FSI somewhere else. That FSI can be sold also. In that also GST will be payable because it is not an actionable claim. Now, long-term lease of land for 30 years or more, GST is payable, though actually it is not, because it is not a sale. Even the lease is for 999 years, even then it is not a sale of land, and GST is payable. The moment you call it lease, GST applies. Now, the service code is 99721, and GST is surely payable. Now, in case of TDR, there is only one exemption. That is, as we saw, there are residential apartment and commercial apartment. Now, if the promoter sell the apartment before completion certificate, residential apartment before completion certificate, then on that he is transferring the land also. On that value of the land, he is not liable to pay GST. Now, they have a very detailed mode of calculation. It has been provided in the rules. Now, really, it is very, very difficult to understand that calculation, do that calculation, and then you have to reverse. But now in the brochure, which you will be getting at the end of the session, I have shown one method, a mode of calculation, how to calculate the value of land which the promoter is selling before completion. So there I have given the detailed mode of calculations. You can go through that. Upfront amount for long-term lease provided by special government agencies, it is exempt. But if lease plot is not used for intended purposes, then GST becomes payable. Now, ancillary services relating to long-term lease, like transfer fee, conversion, they are
Hello guys, sir just got disconnected. Sir, there is some issue with the connection. Sir will be back in just a minute. Please bear with us. Yes, sir is back. Sir, can you hear us? That is, sir, can you hear me?
okay. So can you see the PPT?
Yes, sir. Please go ahead. Please continue.
Sorry, there was some power issue. But now I think you can, sorry for interruption, and I got some slight rest also. So that, as we saw, that in case of TDR FSA after 1st April 2019, prior to 1st April 2019, the GST was payable by the seller and not by the promoter. But after 1st April 2019, it is reverse charge. There is reverse charge on TDR and FSI after 1st April 2019, and up to 31st March 2019, there was no reverse charge. Prior to 31st March 2019, the landowner himself was liable to pay GST, and that liability was when he handed over the apartments to the landowner. But prior to 1st April 2019, after 1st April 2019, the promoter is liable under reverse charge. Now, again, the issue is about valuation of TDR, because TDR there is no value as such. But then how to find the value? In majority of the cases, there is no cash transaction between promoter and landowner. If he gives the amount of in cash, cash means real cash check, then there is no that is the consideration and you pay GST. But in most of the cases, the landowner is given some similar apartment, free land, say maybe 30%, whatever department. In that case, on the free value of he is giving to the landowner, that on the similar value you have to have 1/3 value of the land is taken as the total amount charged, and on that 1/3 amount, reverse charge is payable by the promoter. Now here the promoter is lucky because actual land value is more than 1/3, much higher than 1/3, and cost of construction is much less than 2/3. But he is lucky here that he is paying his on lower, so lower value. Now another issue. These are the major issues relating to real estate project. Of course, this is tip of the iceberg. Many new issues, many problems will arise in due course, and then we'll have to give thought to new issues as and when they arise. Now, another is another transaction which is connected with real estate is leasing and renting of real estate. Now, this service falls under 99721 and GST rate is 18%. Now, leasing for residential purposes is exempt. But if it is used as a guest house, then you cannot say it is for residential purposes, and in my view, this exemption is not available. But there is one dispute. That is, for example, a company wants to provide residential apartments to employees, and you give this property to the company to be used as residential premises, not for official purposes, to be used as residence for their employees. Now, in that case, whether this exemption is available or not available. So, in fact, no, many department is also taking a view that when you are given it to the company, it is not for residential purposes, so you are liable to pay GST. According to me, this is not correct, because even if it is given to the company, it is given for residential purposes of the employee, and in that case, that exemption should be available. Again, disputes are possible. See, on each and every issue you think of, disputes are possible. So don't think anything for granted, because you see, most probably department will take different view. Then the demand will get confirmed and appellate level. At tribunal level, you have got about 75-80% chances of getting favorable decision or getting correct legal decision. You see, when one bench of Supreme Court does not agree with another bench of Supreme Court, latter bench does not agree with earlier bench of Supreme Court. So nobody can say that law is settled, but this law will settle after 10-15 years. But you cannot wait for that time. According to me, technically, if the apartment is given to the company for use of their employees as residence, then GST should not apply. Now, again, there is one issue regarding renting by joint owners. You see, generally it is an ancestral property. It is owned by 3-4 brothers, and these 3-4 brothers give the property on rent. Now, sometimes they get the 3-4 brothers get separately the rent, or sometimes they get combined also. Now, in that case, now whether each brother is getting less than 20 lakhs, total rent may be 60 lakhs, but each brother is getting less than 60 lakhs, 20 lakhs. then whether that brother is eligible for exemption of 20 lakhs available to a small service supplier, there is ample case law that each brother will get separate exemption of 20 lakhs if it is a family or ancestral property, and then it is jointly given on lease to lessee. Now, but here the dispute is, suppose you are in the business of, you want to start with the business of giving apartments on rent. In that case, you can, that is a separate AOP. That means you practically form a AOP. But the joint brother, by brothers, they don't form AOP. The property gets to them as by succession. But if you form AOP specifically for purpose of giving the property on rent, in that case, each AOP member will not get 20 lakh exemption. That is my view. Now, renting of precincts of religious places, it is exempt. Now, the religious places, the definition is wide. That is anything nearby the religious places and which the trust is giving on rent, that is exempt. So, broad definition, broad understanding has to be given to the term precincts of religious place. Now, in case of renting of immovable property by government to registered person, reverse charge, the registered person is liable to pay GST under reverse charge from January 2018. Now, next issue which we would like to discuss is about worse contract. Now, as you know, worse contract dispute started in 1985 and the disputes are continuing even today. After introduction of GST, I had a hope that at least that issue will finally go, because under GST, as you know, there is hardly any distinction between goods and services, and all were under impression that under GST the distinction between goods and services will go. Unfortunately, it has not gone, and that distinction is continuing. Headaches of disputes contract are continuing. Luckily, now they are limited because now they are restricted it only to immovable property. For under Service Act, it was applicable to movable property also. So at least that 50% of headache is over. Now, worse contract is defined as a supply of service, even if material content may be 60-70%, but still it is defined as a service. Now you see, they say it is a composite supply and then they say it is a service. Now it is a composite supply, and if predominant contract is material, then it should go as material. But no, they have defined it as a service. I don't know really why they have done that. I mean, they had probably done it for the benefit of advocates and chartered accountants and cost accountants and company secretary, so that they will get a good business. Otherwise, I don't see why they have made it as a service. Now, what are the various issues relating to worse contract? Can worse contract be vivisected? That is, as you know, worse contract composites of goods and services. Now, whether in the worse contract you can split the contract between goods and services separately. Now, there are Supreme Court decisions that a worse contract can be vivisected, and you can charge show GST separately and value of services separately. Because what the Supreme Court has said, that when the Constitution itself allows the splitting of worse contract, so worse contract actually is an indivisible contract. Legally, worse contract is an individual contract, but Constitution treats it as a divisible contract. So if Constitution itself says that it is a divisible contract, then why you cannot split into goods and services? These are the definitions, views of Supreme Court also. So if you follow those views, according to me, splitting of worse contract into goods and services are possible. Again, I repeat, disputes are possible. But now again, what is the issue? It has been defined as a service. So GST rate will be uniformly 18%. Now, this again create dispute. Now, for example, you have worse air conditioning. Now, air conditions, as you know, the GST rate is 28%. But now, when you have got a worse contract of air conditioning, now whether GST should apply to 28% or 18%, really GST rate should apply at 18% because it is defined as a service. But department will not accept that and litigation will arise. Now, in fact, litigation was there For example, works contract and service of renewable energy plant, solar plant. Now, as you know, on solar plant, GST rate is 18%. But if the department was taking a view that if it is a works contract of solar plant, then GST is payable at 18%. Now, as far as air conditioning is concerned, they will trade a 180 degrees opposite view. But disputes were there. Now, luckily, they have sorted it out that on case of renewable energy plants, solar plant, etc., 70% will be treated as value of goods and paid 5%, 30% will be treated as value of services. So at least that one dispute has been sorted out. Earlier they had taken that on solar and 18%. Now, what about the transaction earlier? Now, as far as earlier transaction, also in my view, you can split into contract as per Supreme Court judgment and charge GST separately. But again, you have to go up to at least High Court or Supreme Court to get the issue sorted out. Now, these are concessional rates of GST on works contract. Now, GST generally rate is 18%, but in case of infrastructure related projects or in case of government projects, in many cases, the GST rate is 12%. Now, services related to historical monuments, canals, pipeline, road, bridges, pollution control plants, structure of funeral, burial. Now, you see, if it is a funeral or burial or cremation, then the GST rate is 12%. So at least government has shown mercy दिखा है कि at least मरने के बाद में तो at least उसका GST rate थोड़ा कम कर दिया. Otherwise, it is 18%. Low cost housing, it was 18% up to 31st/3/2019. In case of railways or single residential units, it is 12%. Services to government, educational, clinical, original work, and for business, it is 12%. Earth work to government, GST rate is 5%. Now, at least in case of this project, they have made it clear that subcontractor and contractor is also liable to pay this concessional rate. Otherwise, as we saw earlier, that even the promoter is liable to for 5%, but contractor is liable for 18%. In case of this project, they have made a provision that the subcontractor and subcontractor is also eligible for this concessional rate. Now, as far as works contract is concerned, there is one very issue which is directly connected with works contract or real estate project, and that is the service of tolerating an act or situation. Now, this is defined as a deemed service. Now, what are coming under this tolerating an act or situation on which GST is payable at 18%, LD charges, late delivery charges, demurrage, cancellation charges, penalty for breach of contract, non-compete fees, forfeiture of deposit or advance as penalty, surrender of tenancy rights, tenant getting rate for alternate accommodation. Of course, here tenant is liable, check bouncing charges, notice pay. You see, if suppose the employee is supposed to give 3 months notice, he doesn't give 3 months notice, he says, I will pay you salary for 3 months. On notice pay, the company is liable to pay GST because it is tolerating an act or situation. It is not reverse charge actually, it is forward charge. It is the service is provided by the company to the employee. All these services are provided the person who is receiving the amount, and then he is liable to pay GST under forward charge. You can easily see from the list that in case of many of these transactions are direct related to works contract or your real estate project, and then you have to be careful about that. This is not reverse charge, it is forward charge. So there are some exemptions in respect of services supplied to government. Pure labor services to government in respect of functions relating to Article 243W and 243G. Labor contracts, sweeping services, consultancy services, as long as they are related to these activities of government, they are and they are pure labor services, then they are exempt. Security services provided to government, according to me, they are not exempt. Though there is one AR decision that they are exempt, I don't agree with that decision. Security services is not directly related to this services of Article 243W and 243G. According to me, this should be taxable. Now, if it is composite supply service with up to 25% goods, they are exempt. Advocate and arbitral tribunal services to government, they are exempt. So you see, advocate and arbitral tribunal, they are never liable to pay tax, because if they provide services to government or unregistered person, they are exempt. If they are providing services to a registered person, the registered person is liable under reverse charge. So advocates and arbitral tribunal, they are never liable to pay GST. So this is all I wanted to cover in as short time as possible. Now we'll give some time to question and answer. Sometimes I may not be able to reply immediately. In that case, as you are aware, Taxman has a query board. You can put that query on the query board, and I try to reply as quickly as possible. Now I will see and if I can answer them.
So, sir, there are few queries which we would be taking up. There is one query regarding the reverse charge. It's of Mohammed Asek. He's saying security services provided to local authority, whether reverse charge would be applicable on this or not.
According to me, often I cannot say, because many I think it is taxable. The security agency itself will be liable to pay tax. There is no exemption.
Okay. So another query is builder made two separate registration, one for sale of undivided land and another for construction of apartment. Now the question whether buyer will pay GST on total value of undivided land and construction cost, or only cost of construction. It is not affordable apartment.
Actually, department or government is taking a view that even if you are, there is AR decision also, that even if your land value is shown separately, it will be taken as total amount, and on the total amount you have to pay GST.
Okay.
So you cannot exclude GST. But suppose you exclude GST, then that is rate becomes 1.5% or 7.5%.
So one of the interesting query which came during this session, though we have answered this, we would want that your insights also. The query was that RERA has passed an order against a developer to pay compensation to a unit holder. So the unit holder receiving the compensation from the developer, is it taxable under GST or not?
It is taxable at his end because it comes under tolerating an act or situation. But there the person who is receiving the money, that is one who is receiving the compensation, he is liable. Not the promoter, because promoter is who is getting the money. That customer is getting the money. Eh?
Okay, sir. Okay.
So he is liable to pay GST if it is exceeding 20 lakhs.
So this is from our side. If you have any other query, you can post it to sales@taxman.com. We thanks for the to all the audience for listening us patiently. Though we have certain issues during the webinar regarding the communication, etc. So we'll try to make it more robust next time. Yeah, this is all from our side. Thank you.
Okay, thank you. Bye. See you.
Thank you, Datesa. Thank you for your time. Thank you, Sunil. Audience have been very patient. It's been more than 1 hour.
Yeah.
Right. So quickly, hope all of you were able to download the ebook and the PPT. Okay. So let me just open that for download once again if you need it. So I'm just down. So this ebook and PPT will be helpful for you for your future use also, right? So in the meantime, let me just quickly give you some information about Taxman books. So it is available through your trusted booksellers and completely using online bookstore. So here is the link. I have already posted the link in the chat on the top, right? Please go through that, and there's a simple 3-step process where you can just show your interest, and your nearest bookseller will connect you and deliver it to your home, right? So thank you, Tata sir, once again for your wonderful time. And Yes. So have a good day ahead and have a good weekend, everyone.
Okay, bye.
Okay, sir. Bye bye.